Now, most of you watching this video will typically have a love-hate relationship with gold. It's an amazing asset class to trade because it provides huge amounts of volatility and volume on a daily basis. So it makes it great to day trade, it makes it great to swing trade. It really does, provide a lot of opportunity. But what comes of that as a downside is it can be really, really difficult asset class to trade as well. So today we're going to go through some really valuable tips and advice that you can implement straight away into your charts, into your trading, into your routine to make a better difference and to start seeing some more consistent returns on gold, and that you are in control of it and not the other way around. So you don't go through these big losses, these big losing streaks when it comes to trading this volatile pair. Let's get into the video. So guys, my first point is around time frames, and it's always for me going to be higher time frames. I've got the weekly up here chart, as you can see, and you can see already we swing so much nicer on the weekly and the daily and the higher time frames. Now let's take, for example, this range here. We're at sort of 1977 and we come down to 1639. That's over 3,000 pips in that range here. Now look how clean we are. We've got a nice bearish leg to downside, healthy pullback, next leg, healthy pullback, next leg, healthy pullback, and then we bottomed out and we range, and then we saw a break of structure clearly on the weekly, and then look what followed, and then a breakout to the upside. So things like structure on higher time frames, when we see breaks of them or respecting of structures, so lower lows, lower highs in a bearish example, they're so much more respected and trustworthy instead of it being even on the 1 hour, 30-minute, or even, obviously it's even worse the lower you go. So if we just go back to around where current price is at the moment, you can just see how many opportunities there are here where price has pushed higher, we've pulled back, we've pushed higher, we've pulled back, we've pushed higher. It's a lot cleaner. Whereas let me box off that same area of price here. And if we simply even went down onto the 1 hour, if we can find it, there you go. Now this is 1 hour price. Now, yes, we can still see overall we are trending in the right direction. This is within the box I've just shown you though, but look at all these swings here. Look how bearish we look. We push lower, then we break higher, we then break lower again, and then we're invalidating structure to the upside and the downside, and it's hard to know what do we trust, what is valid and what isn't. And so again, you get a massive push high and you think we're trending nicely, and then a huge dump. Whereas even if we just simply go out to the 4 hour, and if we go into that same area of price again, on the 4 hour, it's better in terms of the way things swing. It's definitely better, but look what's even better than that. If we go onto the daily and that area of price again, look how much cleaner it is. And yes, it means if you're trading off these time frames, the daily, yes, it's going to be more swing trades. But when you get moments of wicks and things like that, that stops a huge amount of traders out on lower time frames. You don't get that as much because stops are slightly large. Obviously, risk has been accordingly managed for that. And you just see how price is much, much nicer in terms of the way it swings. Okay. Bearish structure looks better. Bullish structure looks better. You can identify those higher highs, higher lows a lot easier. It's just a nicer time and you're not going to get as confused. So next would be timings of trade, on gold. Do I trade gold every week? No. I might trade it 1 to 2 times a month, but those times that I do trade it tend to be really big positions, really healthy percentage gain returns, and obviously a lot of pips. We're talking 300-400 pips at times. Gold, yes, it's volatile every day. Yes, it provides opportunity every day for lower time traders. But just because there's opportunity, it doesn't mean it's a successful opportunity. It doesn't mean it's going to return you healthy percentage gain consistently, especially if you're within your first 3, 4, 5 years of trading where you don't have that time in the markets yet and that you're lacking that experience. And that's fine. That's just a time thing. But what it's typically finding on the charts I've showed you earlier, those swings where let's say we're in a bullish market and you see that higher high form, we're waiting then for the higher low to form to get that better risk to reward, to get that better long entry. That may take 4, 5, 6, 7, 8, 9 trading days to have that pullback, and that's okay. And some of you might be thinking, well, why don't we in the meantime short that pullback? But you're then trading against a trend. You then don't know if then gold is suddenly not going to have a nice healthy pullback. It's just going to continue shooting up in that same direction, hence then stopping you out. So don't count a trend trade, especially on gold. But my thing is, again, it's quality over quantity. And this is what I mean. You're not going to find you're going to get the best optimal position every week, not even sort of sometimes every couple of weeks. On average, I find for me, it's 1 to 2 times a month. Sometimes it's a little bit more, and obviously sometimes it might just be once, but that's okay. You imagine in a typical month, you probably only get 5, 6, 7 healthy, good trading days in general, depending on which, whatever asset class you trade. So aim for quality over quantity. 1 to 2 trades a month on it will serve you such better in the long term, and consistency and healthy payouts. Now, the next healthy tip I can give you is have a look at the chart again. This is gold, and this is its best friend, silver, okay? 2 really big commodities. Now, this box that I've boxed off is the same data range. So it's from the 5th of February 2024 until currently now, where price is currently trading live at the time of this video. Now, is price action the same? No. Obviously, you can see immediately as I flick between the two, they're not the same in terms of day-to-day price action. But is the overall trend the same? Yes. And it's rare over the last 10 years where I see gold and silver not trending in the same direction. They have a huge amount of positive correlation. And people who trade the 5-minute, 15-minute, the lower time frames will argue, oh no, there's times where they don't correlate. But again, as I've already said earlier in this video, those types of time frame traders on gold ultimately will have a harder time finding long-term consistency trading it. When you look at the weeklies, you look at the daily, price action is, yes, it's different on a day-to-day basis, but overall the trends are better and they mirror each other really well. Typically, silver will tend to move earlier than gold. Not all of the time, of course. Nothing is 100% certain in the markets, but a lot of the time, silver will tend to paint the way a little bit sooner than gold. And sometimes that's just a difference of an hour or two, or sometimes it's 2 4-hourly candles. But you get the picture. Get silver on your watch list and get it right next to it on the watch list, so you can flick and intertwine between the two. So sometimes when you're scaling in potentially for a 4-hour or 1-hour entry, if you've seen gold has already slightly started to move, it's just that extra little confluence that you can use when it comes to then executing on gold itself. And last but certainly not least is the DXY. Now, I have constant conversations, I would say, with people online where they say the DXY has nothing to do with gold, and it's a load of nonsense. I'm going to explain why. Yes, they are in different asset class. Obviously, the dollar index, it's an index, it's an index. Gold, obviously, it's a commodity. But the DXY obviously gives us the overall US dollar market sentiment, overall US dollar strength or weakness, of course. Now, if we're going off higher timeframes on the DXY, again, over the last 10 years, and I have the data to back this up, whereas a lot of people don't. They've not had that time in the markets yet. When we look at that data, a lot of time, and again, not all of the time, but a high likely in percentage of the time, when I see the DXY being bearish on the weekly and the daily, we tend to see gold is in a bullish trending market on the weekly and the daily. Same with silver. And obviously vice versa, when we see the DXY pushing well, pushing higher, and it's bullish on higher timeframes, we'll typically see gold and silver sell off. Now, at the current time of this video, we're in the middle of October 2024. Now, with the US election coming up in November, I've been saying this to my community for ages. Buying gold gradually is one of the best things you'll be doing, because with the uncertainty that comes with US elections and everything that's going on around sort of Trump as well, and indictments and all of that side of things as well, there's going to be a lot of uncertainty coming into the markets. And how will that typically respond? It will mean US dollar weakness. Gold and silver, obviously safe havens when it comes to US dollar bearish sentiment, hence gold and silver will continue to rise. And even this week, we've seen gold make new all-time highs. So they are correlated, and it's important to use them both within their own right. But I will never ever take a trade on gold or silver without checking the DXY, and I will still never take a trade on gold and silver if there is a lack of correlation between the two. Because don't get me wrong, there will be times where maybe the DXY is bullish on the daily, and so is gold and silver. But for example, when we dive into that deeper in that individual example, actually the DXY is just having a pullback within a bearish higher weekly trend before then selling off again. So it's really, really important you look at things on the higher time frames, more macro side of things, especially if trading gold as well. There's a heavy correlation, obviously, with macro news, fundamentals, that side of things. So again, gold is a fantastic asset class to trade. It really, really is. But my opinion is that a lot of people in those first 2-3 years, where you're very early on still, should probably stay more away from it unless you can preach that ultra strict discipline. And a lot of people 2-3 years in still struggle with that habit, and obviously that's self-inflicted on themselves. But if you can stay disciplined and you can execute properly and effectively, and you get the right mentorship with trading gold and silver, it can be a fantastic asset class to trade, and it can do wonders for payouts and do wonders for incrementing and increasing percentage gain. As always, guys, thank you so much for watching. And if you want any further help from me, then of course, check out the links below. Take care, and I'll see you on the next video.